Folks, I'm going to tell you 5 quick facts about black bull markets. Now, did you know, number 1, they're New Zealand FMA regulated. Number 2, did you know they have a copy trading service where you can either be a signal provider or copy signals? And number 3, did you know they've got over 26,000 tradable assets, including Forex, crypto, stocks, indices, and even more? And number 4, did you know they offer 500 to 1 leverage? And number 5, if you open up an account today and trade 1 lot a month, they're going to give you TradingView Pro for free. Check them out, Black Bull Markets.
Hello everyone. Welcome back to the stream. I know you're getting this, but I'm just making sure that we get some clarity in here. There we go. Good morning, good afternoon, good evening, whatever time it is in your part of the world. Hello and welcome back. It's nice to see that we're trading. We're trading a Blue Guardian challenge right now, and yes, it's really nice. A Blue Guardian's pretty legit. I'm just going to bring it up here. Blue Guardian, and log in quickly and show you how to get this stuff done. I'm going to show you the actual Guardian protection thing and how to activate it and everything like that, so that it's done. Okay, now let me just share the screen quickly. I'll put it up over here. We've still got some time. We've got a good 30 minutes, well, 17 minutes before the trade comes live. Good evening, Abdul Yusuf. Nice to see people are around. I see Nightology has already been in here saying hello. It's good to see. Let me just share my screen quickly. I'm going to present. There we go, share. All right, let me just make this a bit bigger. Okay, so I haven't taken any trade yet, okay, because I have the Unlimited Guardian, I've got 100K, and we're using this. Now, my whole plan, I'm going to reveal today. Hello, Hamada L9RA3. Wow, how's it going? Love the photo, it's nice. That's a good one. Okay. Now, what a lot of people are unaware of, okay, is that there's this Guardian protection thing. Now, this Guardian protection thing is pretty cool. I'm going to click on that. I'm going to go here. Now, we have in this, we have a balance, okay? So because the maximum, if you can see right over here, there's like current balance is 100,000, equity is 100,000, all right? Now, what we have is your stop loss must be between 0 and 4,000, because 4,000 is the, if you go to dashboard again, 4,000 is the max permitted loss in the account. Okay. Now, for me personally, I want to only risk 500, so I put that in. Then, if I feel like I'm over trading, at any point, I can literally just click on disable trading until tomorrow. And then it will not permit me to enter trades at all, period. Okay. Now this is really, really cool. They say the Guardian Protector accuracy right over here is we recommend no higher than the 3.7% stop loss to be safe. So it could move 3.7%. Again, that just depends on how fast everything is moving in the with the legs and the price and how you enter. So again, just mitigate your risk. Always be aware of commission fees. Okay, just be aware of the commission fees, because they're there and they're a thing, and a commission is seen as money going out of the account. So then the account will get blown. If you say, for example, I take a $4,000 trade and I lose that trade, then the commissions on that as well will be around, let's say, $400, $500 in commissions. So that's actually 4,500 that you're risking. So you're gonna need to balance all that kind of stuff out. And not a lot of people are aware, and I said this previously as well in my previous streams about the spread and also commissions, and that traders, for some reason, lots of traders think, oh, you don't need to think about that. You need to think about it. Okay, I'm being quite serious. If you do not think about these things and you just go on the Instagram and Twitter and stuff like that, and you see these people posting these amazing trades, and you're like, oh, they're doing that without indicating spread and without indicating the commissions on their broker. Yes, they are making money, but it's not as much as you think. Okay. Now, the most brokers use two different forms of commission. The one is they have a free version, okay, and the free version includes the commission in the spread, so the spread will be higher. Then you have the brokers that either have a raw or a razor account. All right. Now the raw and the razor accounts, so what those do is those are basically lower spread but a higher commission. So you have maybe a 0.1 or 0.2 of a pip spread, and you have 0.6 to 0.7%, 0.6 to 0.7, which you need to mitigate with commission. So it is slightly less than what you'll be going for, and that slightly less, that little bit more, means more profits. But you have to be aware that as you increase size, it means increased commission, because they charge per lot. So if you go 100 lots and it's $6 a lot, that is $600. Yeah, commissions can get you. When you have your own account, ever, you have to be aware of the commissions. Now, that's why I mentioned previously as well that on Blue Guardian, they have a $6 charge. So it's $3.50 aside. So $3.50 to enter and $3.50 to exit, which they charge as you enter the trade. They have everything in one go. Most other most other brokers will charge you $7. So sorry, $7, which is $3.50, but Blue Guardian charges $6, which is $3 aside. All right, James Darius. Links are not opening. Which links are we talking about here? Hold on, I'm just looking at this quickly. 1 o'clock. Let me go into the is the sound coming through clearly? Is it all good? Can everyone hear me? Just give me a heads up. I'll remove this one. Just give me a heads up that the sound is coming through clearly. Yeah, heads up. Oh, I can actually hear the sound myself, which is fine. And let's go on to here. Let's look at the trading up Blue Guardian. I'm just checking. Error establishing database connection. I'm also getting the issue. All right. I'll send a message quickly and see if we can get. Here we go. Okay, send him a message because I did check it out as well. So these links and stuff over here, I just checked. It's giving me an error message too. So as I was saying, let's just go back into this. Guardian Protector, this whole Guardian Protector thing right there. All right. I put in my stop loss. It's you can do it per trade or you can do it for the day. For me, I'm not even risking 500. My risk tolerance is 0.25% of the account. All right, now I'm going to keep that up for later, and I'm going to get I am going to get the share present my account up. Okay, let's bring it here. I'll remove that. Okay, so what we have now is I have my risk over here. All right, as you can see, I can choose what I want to risk. 0.25%. That is my risk. I'm risking $250, and depending on the size, if I just do this, for example, and I do this and I make it a sell because I'm expecting sell side, then what we'll have is maximum lots I'll have is 5.31, which will be around $25 to $28. I mean, it would be $30 to $33 ish for the entry into this for the commissions. Okay. Yes, I'm doing the 0.25%. Reason being is because the account has an $8,000 maximum drawdown. Okay, maximum drawdown. Daily drawdown is $4,000. So let's divide that into how many trades that we can take. If you lose every single trade and you take a 1% risk, you only can trade 8 times. That's it. 8 trades. And what if you fail? What if you get the wrong entry? Okay, you only have 8 trades to do it in. If you do it at 0.5%, you then have 16 trades to do it in. If you take it to 0.25%, you can have 32 trades. As in, you get every single trade wrong 32 times, then that's very rare. Unless, I don't know, I've never seen someone lose 32 trades in a row. I've never personally lost 32 trades in a row. But if you do somehow lose 32 trades in a row, you have that much leeway. Okay, now what we're doing here is we keep, I'm not entering yet because it's not my time. I've still got 7 minutes until I start looking for where the market wants to go. Okay, now we're going to go to our, I really like that. That was a great thing right there. Now I have my 3. So if I just tile the windows quickly, you can see that I got AUD, I've got GBP, GU, and I've got EU, Euro USD. The reason I trade these now in the morning is because the the indexes, the indices aren't moving as much in the Asia session. Okay. So Kalashnikov 47, this one over here, this trade manager is actually, let me just go here, is not there, expert advisors, is from the market. Okay, you can get it on MT4. They also provide an MT5 one, and it is a how do I say it? It is $100 for a lifetime access. You get 10 activation codes, and then there's another one for $30, and it's a 3-month like period you can trial. That's the one that I initially did. I did the $30 one, and I was just trialing it to see if it works nicely or not. And then after that, I did the I got the full version because I really liked it. There's a whole bunch of things that you can do in it. So with that, you can set up a whole bunch of breakpoints, all this kind of stuff. You can set up your TPs. You can also set up, if the trade is going against you, you can set up partial closing as well, of like partial stop losses in a way. so that if it goes against you a little bit, you take most of your stop loss off, and then you only have a little tiny bit of risk in the trade. But I'm going to keep it at 0.25%. My rule is that I have 2 trades in the session, 2. Okay. If the first trade goes wrong, I cut the risk in half. So that means that from 0.25, I go to 0.125 for that risk. Okay. That's half of 0.25. Now, that means that maximum I lose $375. Okay. Plus commissions, it'll be around 400 and something, which is again, in the Blue Guardian, my max risk for the day is 500. Okay, my trade goes for a 1 to 2 and then a 1 to 4. And that's it. I can obviously be greedy and decide if I see like a big move coming in, then I can pull the take profit even further down. But my stop losses, they stay where they are. I can pull the profit down, but I can't move the stop loss. Okay. I actually need to bring up my trading view. I'm just looking at this chart raw. Here we go. I need to set up my stuff for the day, so I'm on Euro. Where's our times? And then we have 604. And then we have 745. Right now, what I see in the chart is that they're indicating, like I said, I'm looking for sells. Okay. Again, we are within right now, just like Friday. Again, we are in the. I'll bring up my trading view. Let me just remove that quickly. Okay. And we have this. We are within the opening gap today. Opening gap. Okay. Let me just go onto this one. Pull this up. Remove this. Add in. Go. Share. That should be good. Okay. So right now we are. Let me just remove that. Remove that. Or just press Z. Remember on last time we spoke, which was the last stream, this point that I mentioned, you see how perfectly price just rebalanced to that and the opening gap. Very, very simple. Drag that out. Look what happened to price over here yesterday in London session, 6 o'clock for the 6 o'clock reversal. And then it came down here. I actually was checking this out and I saw that there were equal lows here and it went up because there were equal lows here. Okay. Now on public holidays and news days, you forward 1 hour on the strategy. Okay. So we have 9 o'clock, which is where I usually trade, 9 o'clock. Okay. 8:50 to 9:10. And then with the main pullback thing happening at 9:30. Now there's 2 ways for the trade to work. It can either go down and then go straight up, or what can happen is that it can go up and then come down and then continue to go up. Those are the 2 ways that these trades pan out. Now, obviously, that is what happened over here. after 10, so forward 1 hour, we have 9:50 to 10:10, and you see at 10:30 what happens. There's a big switch around. So again, it does this. Okay, so instead of coming up and then coming down to here and then going up like this, it goes from there, it comes down and then goes up and then continues. Same rules for the trade apply. The rules that were at the time. Of course the market's going down. Of course it's going, of course it is a sell. That's the thing. But we have to, again, we are just in the time now between 8:50 and 9:10. Okay. If it goes further, okay, let me just pull this up. Okay. If it goes further, all right, this, it still needs to close this in. This line over here, it needs to close it in. If it goes further and closes that in, that would then invalidate my sell for in my time zone. Again, we are within this. I'm looking for, at my time, for price to be above here, above the gap, and then I'm targeting the gap. Now we're already within the gap, so it's a bit dodgy. Of course, it can still work, but there's more risk of price seeking of the smart money, of the algorithm seeking liquidity on both sides and then whipping it out. What we want is for the liquidity to be wiped out first and then to go, and that's when we enter. So that's what happened the previous day. All right, you can see right here that it sets up the liquidity, breaks down. You would try and maybe expect something to start happening there, but it didn't. It didn't change character. It didn't change the. It didn't break market structure. Over here, it did break it a little bit, so you might have gotten that wrong. But again, like I said, there's 2 times that you can trade in the day, well, in the session. So I would have personally, if I was trading yesterday, I would have entered this, had this here, and I would have gone to my 4. Okay, but that didn't work out. So we then have our next trade, which means that as soon as we break market structure, I'm looking for fair value gaps in this area. They can be either one of those. That's a very big, important thing of interest. And then we enter and we have this and we go to a 1 to 4, which is over here. So that's basically how I trade. And then London, it's set up equal highs beautifully up here. If you look at the time, let me just go to the candle over here and the opening of that candle. No, closing of that candle. No, opening of that candle. There we go. Look at that line over there. See where liquidity comes to? See where liquidity tries to reach? It reaches there in New York. Funny. Remember what I said about this whole price range here being like the settlement price? Okay. So Asia needs to go there. London needs to go there. And then you have New York needs to go there. They need to settle every single time. And there's still this little bit of price action down here that has not been seen to. Okay. A tiny little bit over there that has not been seen to. And that correlates with the MMG. MMG. I'm going to be introducing concepts to you guys today. Okay. New things. The MMG, while we're still waiting for this to happen. Again, we're within the daily gap. Again, okay, there's not enough movement for me to actually enter. So I wouldn't be entering. Okay, and unless price is outside of the range. So because we're in that within the daily gap right now. So let me just check GXY quick. I can reset this. Where is it? Why'd they change it? Okay. Again, same thing happened, just like we did. Nope, like what happened last week. Okay, it hasn't completely filled this in. It might bounce away and come back, but ultimately, my trade needs to, at this time, right where we are right now, I would want price to be somewhere like over here. And then for price from that level right here to go up into the gap, because that's my target. They're playing dodginess. But this is the market. Sometimes you trade and sometimes you don't. You have to have very defined rules for when you do trade and when you don't trade. And I am here every day streaming with you Tuesday to Friday, and you'll see that a trade will pan out or it won't. Just like on Friday, yes, on Friday, what I said about having a sell was correct. And like today, what I said about having a sell so far is also correct. Okay, but it doesn't mean that like you need to be comfortable with how you trade. Okay, you have to be very, very comfortable, and you have to have your your methods of entry defined. So what is for me personally, okay, what I see here is I see a whole bunch of equal highs over there that got snapped. This is 2022 model, but we have these highs right now that have been left. Those equal highs right there. Okay, that could be a target. Could be or is going to be. No, it is going to be. Okay, we look at perfection over there. That's perfection. Going to five, going into 5 tick. Again, the rules for my setup today, I see that this is just, it's building liquidity on the buy side for it to snap up. But we're going to see now what price wants to do, because now the clock's coming in very, very soon. So 850 right there, it's made its move down, and then we have what it's going to do. Move this away and have a look at the rest of this. So yesterday again, the opening gap was not at 604. The opening gap was at 459. Okay, so we have 459, which is over here. You see in the euro how perfect that is. It matches up the same as DXY. Okay, and again, and this time it actually opened the market at 6. It didn't open it at, so here 6 o'clock open. There we go. That was your opening gap. Now, if you see what happened, 9 o'clock, it's away from that gap. It's more probable that there is going to be a buy from Asia into there. Then we have London. London comes perfectly into the gap. Funny. Then goes away, and New York comes perfectly into the gap and then goes away. Okay, so with all of this in mind, that's basically the trade. That's the whole trade idea. It's just using the end dog, having your times. We have our 630 to 730. 630, the highest high of 630 to 730. So we have this, we're 730. It's over here. Okay, so this is your 730. And then we have the lowest low of 630, which is actually on 630 on the dot, which is over here. These are your points of liquidity. Okay. And as you can see, it takes out that liquidity and then starts making its way down to the other side. The spread's just opened a little bit, which means that something's going to happen. So, how to use spread like a ninja. When you see spread, the little bid-ask price, okay, it opens and closes all the time. When you see it widening a lot, it means that it's grabbing some form of liquidity, okay? Brokers are sneaky. They want people to get stopped out of trades. Even if they're in profits or they're not in profits, whatever it is, they will bring the price that they will use the spread. They'll widen it on purpose to take the people that have, for example, so according to this, that tiny little move right there, okay, it widened and it took out the people under here and it took out the people on top of that candle. Okay, this is I'm looking at the 5 tick right now. I'm actually just waiting for that perfect square to form. There's a perfect square on top at 7652 to 7646. So this is perfect liquidity. 7652 around here. 246, which is over here. That is perfect liquidity right there. That is a target for the whole day. Literally. It's set up now in Asia. Again, it's 9 o'clock. We're within the opening gap. This liquidity is set. It's a target. And so now again, we wait half an hour. Because what might happen is they might leave this unfilled. Okay. Then what they'll do is they'll pull price up above here to take this and snipe it out, to entice people into taking more buys, and then they'll rick it down back to the opening gap to fill it in. Or it might just go and fill this order block here, okay, and just come in down and claim the rest of this liquidity that's over here. It's perfect liquidity that was set up just after the insane spread. So Owen, that's actually a good question. It's a good question. What time frame are my fair value gaps? My fair value gaps are on the 1 minute. So if I pull this over here and I do this, I have lots of different things that I use. Okay. We have the 1 minute over here. Bang. That is how I indicate fair value gaps. So if I'm looking at this leg that's just come down, that would have been my fair value gap right there. And I would have labeled it as 1 minute fair value gap. Good question. Thank you. Hello, Hina. How are we doing? As I said, again, it is a no trade day, no trade Asia session. Again, just because we are within the gap right now. Same thing as what happened previously on Friday. We were within the opening gap range. And because there's so much liquidity on the buy side and there's so much liquidity on the sell side, it could go either way. All right. it decided that it's going to snap this and it's going to use my times over here to go up and seek perfection. And if you remember, I said that there was a little perfect piece of price action that I identified. It was over here, okay, and it was from 820, which is over here, until 824, which is over here. That little perfect piece of price action, I'm just gonna make it a different color for you, just for clarity. All right. If I drag that across, do you see how it respects it perfectly? Comes in, it respects it perfectly. Now we drag it across the whole day again to the next day, and it respects it perfectly. Continue. It respects all of that. It breaks, comes in, breaks, comes in, breaks, comes in, break, and then we have the move. That's what happened yesterday during the public holiday. I didn't actually expect it to move that much during the public holiday, but it did. But that means that there's more profits because we have the high and the low of our public holiday, which is here and over here. Now, I expect both sides to be seen to today. Over here's the high. So let's just make that daily high. And I'll make this one the daily. Where's my daily low? There we go, daily low. Okay, there's a daily low and there's a daily high. I expect both sides today to be taken. This side over here, that low and that high. So it's going to either go up and then come down, or it's going to come down and then go up. So if you're a 15-minute, 1 hour trader, you might have success today. If you remember in the last stream, what I said about 9:15, that specific candle, that's going to happen. Not a specific candle, but specific time where the price does a little, gets nice and tight. And you can see right here. Yes, I'm zooming in, literally. 1 pip is this whole range here. That's 1 pip. Okay, so really, when you see the stuff in your charts and stuff and you're zoomed out a lot, you need to move quite a bit. Okay, so let me just label that quickly. 30 to 20. Okay, that is 1 pip of a move. And if I control, and if I make a whole bunch of those, okay, and I pull that down, that's another pip. That's another pip. That is another pip. So in this range right now, we have, if I make it exact, 1, 2, 3, not even 4 pips. It's 3.5 pips here. Okay, of range. You factor that in to your risk. You take a trade again, that if you're going to go 4 pips, so 70 to 30, if you're going to go with a 4 pip move, you have to factor in that 0.6 of them over there, okay, 0.6, that when you enter the trade, so say you enter over here, okay, with your stop wherever it is, and you're moving that much, this point over here, the 0.55, that is commission. That means that it has to break that to make commission. After that, the rest of it's profit. There is a pattern with those wide end wogs. I agree. I agree fully. I want to show you something very, very fascinating. Where was it? It was in the middle here. at this time. See how tight the price. Oh, sorry. Let's just focus on what's happening right now, not before. But you see how tight price is getting around this area. Okay, we're waiting for this time right here to show us what's going to happen. My expectations are that it's going to go higher and then come lower, because DXY is doing the same thing. It's just set up this beautiful over here. It's left a little bit of tasty deliciousness. But again, if they leave that in place, it'll stay there for either London or New York to come and fill that in. Okay, we still have this big one over here on the buy side that has been unfilled, that needs to be filled from previously. From there. That Friday needs to be seen to. It will at some point. Because I'm expecting really tight ass price action. Now it actually looks like GU is giving me a better mode. AU is down, EU is down. The SMT is quite clear. SMT. Let me explain SMT quickly. As you can see, I have GU over here. SMT, every high over here, they don't include the wicks. They only include the bodies. Now, if you see price right now, over here is the bodies are going up. This is all going up in price. Where the bodies here, from here, are over here. You can do the same thing over here. This is going up, and that is going down. Logically, the one that you want to trade is the one that has reached further, not the one that has reached down. It's the one that's reached further. So with the with GU over there, okay, let's just pull that up. That little bit of price action over here has reached up further. Well, that is way too perfect. Way too perfect. Oh, that's tasty deliciousness right there. So if we're see, look how tight price action is at this time. Look how literally, look how tight this range is going to be. The candles don't move. Because they're deciding, they're waiting to say, okay, this is what we're doing for today. What are they waiting for? That's something that I might share with you someday. But just keep that time in your mind. 9:15. So let's just make this a 5-minute quick. You see how price is reacting there perfectly? So it's that little perfect box price action. It's beautiful. And we love it. Okay, so sell side has been left open. Okay, this is important. It's important to know. That sell side right there has been left open. This whole little box. This perfect price action over here was taken over here. Yes. The sell side is left open. So we might actually get a trade today. Let's just measure this quickly. See how much range we have. So depending on what they want to do here, we have 3 pips, 3.5 pips. I want it to be more, or at least 5 pips. So that range, I want a 5 pip move. Okay, pull out the range. I want price to be up here so that I can take it back into where it is. At least. If it's more than that, if it's like 14, 16, 24 pips, great. It means more profit. So looking at this price action, my next time frame to trade will be 9:30. You'll see that this candle over here will be taken at 9:30 and then they'll reverse price. Because we have equal pressure, what happens is we have equal perfect price action. Then what they always love to do is push price away from it to entice people to come into the market and then rip it down, or vice versa. Oof, what's going on here? What is going on here? Where's price? There we go. You're so 100. You do not trade now. That's why I don't trade it in Asia. Because it's useless. A 5 handle range goes from 45 over here down to 40, which is here. And you have like a 5 of that. That is literally just, and it takes a long time to do its thing. It takes too long. And this is all happening. See this point in price that I dragged out? It's amazing. It's just amazing. And you can spot the stuff yourself. Just look for perfection. If you see something that's too perfect, you target it. See what happened? Perfection, breakaway, come back. Now we have this. It's in that perfection range. What's happened? It's come and filled it. There's a fair value gap there. But we'll see from here because there's not the time that I want to trade. Because we have that is an important piece of price right there. Important. And that's important. So I'm going to label that for everyone. Throughout the whole day, Literally the whole day. Terry, I wouldn't say the most difficult part of trading is emotion. In the beginning, it was emotions. When I didn't trust my system, I didn't trust myself. But as soon as you stick to, or you find something that works and you know it works consistently, day in and day out, okay, you might have 2 losing trades in a week. That's okay. You might have 3 losing trades in a week. That's okay. Because you'll have 2 winning trades in that week. It's a really good question. Okay. And if your risk management is on point, like I said, with my previously, the amount I'm risking is 0.25% on the account. That allows me 32 trades to be wrong, 32 times. Now I only need to be right with my risk management, okay? Because I have a 1 to 4, or 1 to 2 and then 1 to 4, which means I get a 1 to 3 reward for it. I only need to be right 10 times out of those 32 times to be break even. Or just under break even. I find one of the hardest things emotionally is when trades activate in a time that you don't want them to activate in, as in it doesn't activate in your time. But then when you do that, that's fine because you're not trading. You're out the market. You don't have any risk whatsoever. When your time is defined and your rules are defined, there's no beating around the bush. Oh, and over here, no, 9:15 is important. The reason it's important, yeah, it's going to stay torture for a while. Okay. Well, I might just tell you. This is something that I actually noticed because I study ICT. ICT is all about time and price. Time and price. That's what everyone always goes on about. But they don't actually know what they're talking about at all. They're like, oh, the time and the price, it's within a certain kill zone. Okay, great. Fantastic. That kill zone is there for a reason. ICT has pointed it out for a specific reason because that's when it's most likely for it to make a move. Okay? Now, ICT's way. How that happens is he's figured out all the precise points in price, the precise times when things happen. What are the times related to? Now, this is the question that lots of people have no idea about. They're like, oh, at this time in this kill zone, this is going to happen. But why? Why the kill zone? Why that specific time? Can anyone answer that? Can anyone tell me why those times are important? Apart from the fact that they're most likely to be profitable. Oh, I forgot. I need to turn my light on. Oh, sorry. There we go. Bing. Oh, it's light. There's only 2 people that know that I've told why price this range over here and why it's called the HKG is important. There's only 2 people that know, and the ones that do know, I don't want you to answer. This is going to be new. This is something no one knows about. Literally, no one. Cliff CO, algorithm driven. Algorithm driven, but why is the algorithm driving it? at that point, at that specific time. Why? Dench CEO, because most traders are active at this time, are inactive, okay, or aren't active at this time. Most traders aren't active at this time. I agree. NEB, settlement. That's good. That's a good answer. Settlement. They want to settle at opening price. Yes. Opening price or the end dog. But the opening price there is not the same. So if I go to DXY over here, you can see the time is 6:04 to 7:45. Okay. That's what I put there. 6:04 to 7:45. That doesn't look like a gap on Euro USD. No, but that is the opening range gap. That is settlement price right there. Okay, for the end dog, for the new daily opening gap. Or I just call it opening gap. But that is for, okay, here we go. Settlement price for the opening gap. You see the range? I told you it's tight. Okay. That is the opening price of the DXY. The times that I'm saying that are important are because most people don't know who trades Asia. Who trades Asia? What is the other biggest economy on the whole planet? Next to USD. NEB, it's not Japan. Tanmei, yes, China. Now, China doesn't trade, they do not trade in yuan because they're trading in, that. If they have to trade USD, they'll do it through which country? There's a lot of money going to China from the US and to China. What does it go through? Track the old Silk Road. It's a good question for everyone to think. Okay, here's another question then. If no one's getting it. What country recently is now in control of by China? There's a whole bunch of protests and stuff because a certain country was giving that country back to the other country. Oh, I forgot. Let's put some music on. HK. NEB. HK stands for what? Exactly. Okay. No, wait, this is a bit loud. Give me a second, and then we just reduce the sound. Whoa. There we go. Okay. So we have Hong Kong. As you can see, this label is HKG. It's my Hong Kong gap. What time do markets close in Hong Kong? According to New York time. We're getting there. This is a process of discovery. Okay? If you do not think about the markets as in the way the world works, then you'll never understand trading. what time does the Hong Kong market close? Let me drag this. Let me actually do this for you exactly. 2:59 closing. Wait, where's that line gone? Let me just remove that. Oh, it's perfect, isn't it? There you go. Then what time do those markets open? Simple. This is the Hong Kong gap. You draw it out in your charts and you'll be mind blown. Literally mind blown by how price reacts from there. If price doesn't go for the new day opening gap in ICT, what's it going for usually? If it comes and breaks past this, then it will probably come and target somewhere in the Hong Kong gap. Okay, NEB. I'm just going to pull up a... Let me just remove one of these. I'll remove this indice over here. And I'll add a new indice. Unnamed. Doesn't matter what it is. Let's go here. What time did they close? 2:59. What time did they open? 9:16 today. Price breaks, comes back. Funny. The second biggest economy trades out of Hong Kong. It's not hard. But you have to be aware that these things are going to happen. Okay, now we're at a very interesting time right now. 9:30's come past. And we've taken liquidity. Do we have enough range? That's the next question. 4 pips. Maybe. Let's just check. I'm just seeing price right now, seeing what it wants to create on the 5 tick. And we might even get a trade from here. If you're all on the 5 tick chart or the 5 second chart, I say tick because tick and seconds are the same thing. If you're on the 5 second chart or the 5 tick chart, okay, just literally watch what happens on the 5 tick. Waiting for structure to be broken. It looks like now, kind of. There's a gap up there, it's too perfect up. Owen, this is Euro USD. If you look at GBP, you're going to see the same thing. AUD, USD. Funny. Price just goes exactly where I want it to every single time. See? Almost filled it. Almost. It's literally just a little bit left now. If you look at what's happening on the 5-second, Natology, look what's happening on the 5-second. Look how perfect the range that's forming right there. Between 07675 and 07670. That's an indication that something's going to happen. Alright? It sets up liquidity, it goes away from it, and then comes back towards it. Yeah, I'm just waiting for a break. NEB, ICT can be traded. ICT's concepts can be traded in Asia. I actually find it more consistent. That looks like a break to me. We're just waiting for a tick further and a fair value gap created. There's a fair value gap created. I'm just waiting for this range for it to come back. Oh, there's even a lapping gap. Another concept. A lapping gap. Look at a lapping joint. So left a void on the 5-tick. So you see the gap? Can you see the gap there? That's what I'm looking for. Oh, it's moving and it's not filling. What price is that void? 670 and 667. $670 and 667. There's a void in price over here. You don't see it on TradingView, unfortunately. But it might just rip. Is it not doing exactly what I said? I said price is going to go up here and around 10:30. It's going to rip lower to target those. I'm just waiting on price. See, because of those highs. Anyways. But again, today, like I said, is a no trade Asia day. Just because it was within this range. It didn't give enough leeway. I want to see like more movement normally. Look how it's responding. Look how price is responding to this range. Look how it's responding. Just look how the candle is interacting with this liquidity. Funny. Terry, this is an Asia trade idea. So the Asia trade idea is for the gap on DXY to get filled. That's literally it. All we're looking for is this gap to be filled somewhere between 850 and 910 with the indication that the trade might stop over at 930 if that doesn't work. Okay. So you can literally look over here. That was filled in before. We look at our next one. I'm just watching what price is doing right here. It's coming up to a succulent point. That was left open. And we have the day before. Which is minute. Okay, see here. There's the gap for the week. Opens. Price breaks between 950 and 850 and 1010 with 930 over here targeting. Then that's a trade for the buys. We have the same thing targeting that over there. So yeah, this trade's already moving. I wasn't able to get involved, unfortunately. We'll just wait. Our next trade time would be 950. If it comes up here, it goes down. Depends. Nightology. So DXY, I'm using the TVC. And for everything else, I use either FXCM or I use Forex. Oh, it's not displayed here. Forex.com. The Australian dollar, bang, perfection. Perfection. HK50, that gap. Did you see it? Did you see it? That gap right there. Breaks, comes in at 930. Perfection. Funny. Now let's just remove these and we look even closer at price. What has been set up? NEB, trust me, it's gonna help. It's what I'd call my Asia honeypot trade. But now we're outside of the time that I would like to enter a trade. So that's it for me. I don't trade it if it's not in my time. End of story. Even though it's highly likely that price is going to come and from here and fill in the rest of the range. Yeah, my time was 9:30. Okay, that was when I expected I would want to see price. See this whole price action thing that happened right here from there. See how perfect those are, absolutely perfect. If I make this insanely perfect over here, okay, and put it in alignment there, and I have that perfection right there. All right, we have these candles here. Look what's happening. Perfection, 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 perfection. That ticks perfection, perfection. I mean, it doesn't get better than that. It really doesn't. NEV, I actually created this before ICT even created a silver bullet idea. And I was like, there's no ways he's using it. No ways. But it is what it is. And now we're in that void. And we're in this section of perfect price right here. And we should just put this into a different color. But it's not the time. So the setup is here, but the time is not. So what does that mean? For everyone who loves to get emotional, it means that we don't trade it because it doesn't fit our rules. Then you don't get emotional. Or it doesn't fit my rules. Okay, and that's basically it. And that's why I have that rule in place about time, because if the time goes past, then generally, because there's not like news that's coming out. They used to do this thing with the economic calendar. Now they do this. Headlines. I don't want headlines. I want the economic calendar. Trolls. Anyways. NEB. Just. Let me put up my trading view on here. And I want to show you that one. That I use on let me just remove this and change this to Let's see if it pulls up all my data. Yes, Terry, exactly. Sticking to the rules. That's exactly it. If it, I know there's a high likelihood chance that this price is going to go down here. But because it's outside of my time window, I do not trade. One way to stay in control of your emotions is to not just YOLO. YOLOing gets you in trouble. Okay? It will get you in trouble. This is FXCM, so it should pull up it's not pulling up the data. That's so unfortunate. That's so unfortunate. So, you're not getting, so I have, on my phone, okay, I have all of these little things marked out. I don't know, I'm gonna do this, and I'm gonna go in. Let me see if I can just do this. There we go. You can see I have all these different zones and stuff marked out. Not zones, but times. Okay? It's a bit blurry, but I can't actually translate that and put that onto the chart itself. Because I'm trying to pull up the exact same thing, which I just did, that I use on my phone. And it's not pulling up my data that's stored on my mobile. It's a bit dodgy. For those of you who have a buy bias for today, okay, I have said that what we're looking at is we have our daily high and our daily low. Yesterday was a public holiday. Settlement of opening price will need to be seen to down here. Alright, that needs to be targeted because it opened and it's moved and it's opened above that price there. So it needs to go back down to that price. Okay, very, very simple. It will then target possibly the daily low and then go to the daily high because it'll seek both sides of the liquidity. These two liquidity points right here. I just do, I don't even have it on the, I don't even use it a lot. Where is it? The draw tool. I never use it. Because I don't draw, I just put lines. Press save and refresh. Save. Save on my phone and then refresh? Or the traits, if you took that, still would have worked. But hey, don't think so. Now I press refresh, right? Where's refresh? Oh no, I'm not. This is the desktop app. So this is the desktop app, it's not the mobile, it's not the web app. So I think that's why I can't cross it over. Like where even is the refresh? Oh, sorry. Oh, say that again with charts on the screen. Sorry. Good point. Okay. Sorry. My face was there all the time. EURUSD. So, as I was saying, we have the daily high and the daily low in the previous session. This whole day was a public holiday. Alright? That is opening price right there. That's opening price right there. Bang, bang, bang. Opening. Yay. Now, it closed over here. today price needs to settle at closing price at some point. So it needs to come down to this area here. But because it's a public holiday, there is liquidity above here and below there. Okay, daily low, daily high. There's liquidity on both sides. And normally on public holidays, they love to take both sides of liquidity and then make the move. Whether it's up or down, it depends. Okay, let me just close this. And then I'll open it again and see if it worked.
So he's been looking for somebody who could save him. Instead of searching inside for what they gave him, a strong will, strong mind causes mayhem. We could change the world, change times, rearrange them. Staying on pace, running the race. Life is a chase, I don't want a place, I want to be first. Work till it hurts, dehydrated thirst till I'm in a hearse. High ambitions in the right mind can take you so far. It's like you lived a few lifetimes. Take off, I'ma break off from the weak minds. They can stay soft, you can change lives, you create thoughts, never waste time. You got one shot, you got one life, better pop off. What do you like? Make a dream job. No 9-5, no mean boss, just my life and free thoughts. Could try to play, but you're never gonna beat me. Look the other way.
I'm not getting it, eh? Still not coming through. Even though I've saved it. That's so weird. I had to fiddle with that. Thank you for making me aware of that. I'll just actually just close it entirely on my phone and see what it does. Close this app.
I feel nauseous, believe me. Never had a lot of shit come easy. Had to work hard, struggle just to be me. Had to rise up just so they could see me. Did what I had to do just to feed me, and what was left over I put towards my dreaming. But the only thing in life that has meaning are the things you gotta work for, believe me. Take into your hands a plan, your own hands.
Oh, there's a lot of liquidity. Yes, it just makes me want to trade. But it's not within my rule set. So unfortunately we just have to sit it out. Let me scroll through every single one of these and see if it comes up. Nope. Nope. I wouldn't be on any of these other foreign things like Saxo and stuff like that. Kraken. No, we're not on cryptocurrency exchanges. Yes, Nightology. That's the way you do it, bro. You just don't. If it doesn't fit within the time, and you're not in the time. See, this is outside of the range, right? You don't trade. Like the the max is I want to see. Okay, let's just go to this, and I'll show you exactly what you're looking for. Okay. So previous day, not previous day, Thursday. Okay. What we want to happen is for price to create the gap. It creates the gap. It goes away from the gap and it doesn't come into the gap. Then we have between 850, so over here, and 910. Okay, we have something that happens. There is then liquidity set on both sides of the market. Okay, very, very simple. That gets sniped. It comes down just after 910. Okay, bang. It leaves a perfect fair value gap there. Okay, that is a trade. To 4R. That is literally my trade to the gap. Because there's enough range for it to go down. See, 4 pips. 5 pips down here. Exactly. Okay, it's perfect. Throughout the day, that was left open, which is nice. Okay, so we have the next day. The previous day, not next day. Okay, We have the 630 to 730 liquidity. We have 850 until 910 over here. Okay, so this is your 950 to 850 to 910 range. At 930, it comes into what price? Targeting the gap or further to your 4R. Okay, let's look at the previous day. Time here. What is this, Monday? Yeah, last Monday. What was last Monday? Public holiday, so no trade. The time before? Huh? Oh, see. Oh, it's because I closed the app and then I opened it again. So it didn't reopen, it didn't present the same screen. Okay, here we go. Okay, let's just revise all of that again for you, just to make sure that it's solid. Okay, yesterday. Okay, it was a public holiday, so I didn't trade, but the thing still panned out. We have between 850 and 910, it creates a gap. All right, that little gap right there, that is your trade. As soon as it comes into there, that's your trade. Okay, targeting 4R. But I didn't trade it because I wanted it to sell. That's your important price, because what is that level right there? That is your HKG. Oh, look at that. Nice. Perfect. Every single day. The gap, the Hong Kong gap. Okay. Previous price. Now we draw this out in time. So we have 259 over here. Closing price of 259 to the opening price of 915. Okay, so let's just call that 915, and we're going to call this 259. See what price does. Comes in. Guess what? It didn't fill this in all the way. Why? Because the Hong Kong gap was filled. And that was during London. Then came up, shot up beautifully. Okay. Next, we have this day. Now, time-wise. Time-wise here. Okay. We have your 630 to 730, which is basically this liquidity over here at 630, and this liquidity over here at 730. All right. Now, price goes above that. That creates enough of a range between there, and also, again, if I look at my 259 close until my 915 open, $9.15, it's right there, open. Okay, that whole range there is your Hong Kong gap, or what I call the Hong Kong gap, because no one's ever done the Hong Kong gap before, ever, except for me. No one knows about it. Why is that so important? The next day even. Anyways, so my trade happens, as you can see over here. We have 850, which is around here, to 910, which is down here. It's still away from this price over here. What happens at 9:30 on the dot? The next candle goes into your perfect fair value gap, balance, whatever. If you created this fair value gap and you made this for 1 minute fair value gap, if you took this fair value gap and brought it over here, it would be the same thing. You see, that was filled, that was filled, that was filled almost to perfection. The only gap that you can see in this leg is over here. then that is where your trade comes in. The stop over here, and we go to 4R or further. Nine. Oh, could have had a 9R trade. What time did it switch? It's my London trade. Exactly the same thing. I target this gap. Okay. I look for 250 until 310. 250 until 310 goes away. And then what happens after 310? Breaks market structure right here. And then the only fair value gap that I can see is this one in here. Okay. This is my London trade. It's the same as my Asia trade, and I target the same thing, which is fortunately 4R. Funny. Okay, so let's go back to the next day. Previous day. Yay. Previous day. Let's go look at the times. The times are important. Why are the times important? No, this day was Monday. Don't trade Mondays because it was a public holiday. It's trash day. So we have the day before that. We have 259, just over here. Closing. Yes, lovely. That's drawn out in price beautifully. We look at our next time zone, which is your 9:15. Look at that little tight range. Again, I keep on mentioning it. At that time, it's tight because the market is opening in Hong Kong. Yay. Okay, right there. What's that time right there? It goes down, comes up, breaks structure, leaves a fair value gap. Funny enough, you put price there with the low, below the low swing, okay, which is there or there. Doesn't matter what you do, because that range was 3R, not 4R. That's why I have my 2 rule. It gets taken out. London doesn't reach it, but it reaches that 9:15, the opening of the Hong Kong. So that's your whole Hong Kong gap right here. It's a huge, huge, huge range in your Hong Kong gap there. Beautiful. Okay. Now, what happens in New York? Telling you that this time right here is between 8:50 and 9:10. 8:50 and 10 o'clock on the dot. Look at that, it's 10 o'clock on the dot. Let's just pull that down there, 10 o'clock on the dot. Now there's no ways for you to enter that because it was a, you would be seeking longs into the Hong Kong gap. You see how the top of the range there, the 259 candle, look how price just goes along that. Comes back there. The whole public holiday day, okay? Next day, same thing. All these points are valid. Okay, so we go back to the previous day, okay? Asia strat, this looks choppy. It's not choppy. It is price perfection. Okay, these are all points in the market where it's telling you that it wants to give you money. $59, right there. And then we look at 9:15, which is over here. It's tight, tight, tight. Okay, and that was the opening of 9:15. Tight, tight, tight. Now this is interesting. Why? Let me do this quickly. And I'm going to extend this to the right hand side. So here, here. We'll go settings. Style, extend to right. See how tight that little range is. Even on a day like that, okay? Even on a day like that, you can find that price at 9 o'clock to 9:10 goes up and targets it. It's still small. What's funny about this is if you want to drag out that little piece of price, you go to the right. You can see how perfect price reacts to it. Go to the right hand side some more. Oh, isn't that funny? What time did that happen? Why did it bounce directly over there? Funny. It's all the same liquidity. Anyways, don't have to prove my point. I'm just saying that my trades, that this is what I see in the market and what I've identified and what I call the Hong Kong gap. And it is a very important piece of price and in time. A very important time closing. And we go to opening. Here we go, opening. Okay, so that is then your Hong Kong gap visualized. Right, Hong Kong gap visualized. Look what happens to price. At 9 o'clock, again, because we're within the range, we don't trade. It has to be outside of the range. So the opening gap is here. It goes in. We then have this. Breaks it, sets all this up, breaks it, and comes back. It'll come back into that range and keep going. That's phenomenal. Okay, and you can see, just continue that out in price. Then you have your true support and resistance lines. Okay, support and resistance is literally just liquidity. Okay, again, this part here, this was a Tuesday. 259. 259. Closing. Okay, then we go to 9:15. Closing. Oh, funny. Look at that spike. Perfect. At what time? What time was that? On the dot. Move that, and you can type that in the chart, and you can tell me. Between 8:50 and 9:10, it tells me I want to go down and start breaking structure. At 9:30 on the dot, if you took that trade in that fair value gap because it's breaking, you want to see your profits visualized. You could have, if you held it, if you're a baller and you continued to hold until lunchtime in New York, that would have been a 51-hour trade. Wow. Then we have this as our Hong Kong gap, which needs to be seen to. This whole price sets up, guess what? It goes from Hong Kong gap to next Hong Kong gap. From Hong Kong gap to Hong Kong gap. From Hong Kong gap to next Hong Kong gap, setting it up the whole time. It's the funniest thing ever. Is it funny? No, because it's real support and resistance. It's where the liquidity is. It's where Hong Kong opens. Not a lot of people know this. So that is my trade, literally. And it can yield massive R, but I only take 4. Hamada, I use 630 to 730 is my like liquidity range over here. Okay. As soon as price comes, sorry if you see there's price to set over here, 630 to 730 over there. Now with that, what happens is that price needs to come to it and it snipes it. It shows that it wants to reverse to go fill in the gap, which there's a massive gap, and it got filled in, of course, as it gets filled in every single day. If you train the Judas swing, that's your thing. Like I personally, whatever people want to trade is their own prerogative. I won't judge anyone on the trades that they, or not trades that they take, but the 59. Here we go. Closing. I don't judge anyone on what they, how they trade or what they trade. If you make money, you make money. Great. Hong Kong gap visualized. Funny. New York. Not New York, London. Targets it. New York. Targets it. That was a perfect day. Okay. And then, no, I don't have a YouTube channel. I've got a YouTube channel, but I was using it for gaming. So same thing happens over here, even though it can't go further back in price there, but you will have set up your gap somewhere there. All right. At 9 o'clock, between 8:50 and 9:10, what happens? $7.30, so 6:30 liquidity up here. That was not seen to. 6:30 to 7:30. Then we have 7:30 down here. That gets taken. Bang, gets taken, it gets taken, and it swings on a dime, and then again goes up. Our gap would be somewhere around this area here, okay? And we see, oh sorry, it wouldn't be there, it would be higher, it'd probably be up here somewhere. So price came there and then came back up and then went up here at around 250 to 310 in London. You see there, 250. Price breaks, goes down for your entry at like 330-ish. Okay, my entry would have been on this break here. You target the gap over 4R. I used to play Fortnite a lot, actually. Yeah, so that's basically how this is done. Let me just remove all of this because I don't need it. And we're looking at what's happened in price right now. Exactly how I said it was going to happen. It's going up, snaking liquidity and coming down. Again, it's not at a time that I would want, so I didn't take the trade because there's a high probability that once it makes a move, it goes into consolidation. There's only a few things that can happen with price. Expansion, reversal, or consolidation. That's it. Either it goes into expansion, consolidation, and then expansion again, or it goes expansion, reversal, consolidation, expansion, or whatever. Okay? That's literally it. Okay. So again, all you need to do is mark out those times. That's all you're looking for your Hong Kong gap. 259, which will be around here. 259, closing candle of 259. Opening of 915. See, opening, you see that little candle right there? Oh, it's perfection. That was today. Now we have the opening, or the Hong Kong over here set. That's set. If you are going to backtest and use this, literally do this just today and see it. Literally visualize it. You also need to add in your 604. So over here is 604 closing, which is that little tiny candle there, to your 745 because that is liquidity today. Should be around here, yeah, 45 opening candle, yeah. Okay, this is market open in New York, not New York, for the DXY. So that is your opening gap on currencies. You can correlate this with any currency ever. Period. Anything that's crossed with the US dollar, of course. Okay, you have your opening gap, you have your Hong Kong gap, those two times. Now we're pushing away from this price, which leads me to believe that we are targeting the previous day's high first, and then we'll go for the previous day's low, which means ultimately I'm actually bearish looking at the price action now, funnily enough. Okay. Anyways, I just want to go back onto, where is it? I want to go back onto Blue Guardian, and I want to show you that, because again, no trade today, because it didn't correlate with my rules. Although, that was perfection. You see, and it's the same thing. It's the reason why I say when we are within this opening gap, you've look at the other pairs. I mean, just look at that. That's one of the reasons why I don't trade when I'm in the gap, is because there's a tendency for it to do this a lot. It goes into seek and destroy mode, and we do not want to be destroyed ever, do we? No, we don't. Okay, so I'm just going to close this out, and I'm going to open up that. I'm going to open this Blue Guardian again, just to show you, okay? Every time you have something, you need to come back in here and put in your risk. That's it. Your trades. Okay? That's it. Anthony, my times are even more specific than your kill zones. I have specific times throughout the day and specific liquidity that I look for at those times. Okay, so be careful, and that's why I actually really like this Guardian, this Blue Guardian thing, is just because this whole protection thing, it'll stop you if you move your risk, if you move your stop loss, higher or lower, depending on if you move it into more, so that you get like, oh no, I was slightly wrong, then this will cut you out immediately. You won't be able to take it because it's done. Yeah, it's done for you automatically, and then you can disable your trading until the next day if you're feeling like you're getting too risky, which is great. I mean, other prop firms aren't even offering this kind of stuff, and they should. It should, because actually it should be standard, because you want to protect the capital. When you're trading these demos, guys, you need to really think that the capital is your own capital. Imagine if you had $100,000. How do you feel if you even lost $500? It's a lot of money. Like if you want, it depends on people's value or perception of money, of course. $500 to one person is not as much as $500 to another person, depending on which part of the world that they live in. But I would say that $500 is a lot of money, okay, for the average person. I mean, here in Australia, people on average earn about $200 to $300 a day. And if you're able to make $500, $800 a day, I mean, that's like more, which is great. Obviously, living standards and stuff differ in different parts of the world, but you can literally have your equity and you can set it to be, okay, I have a $15 stop loss if you have a 10K account, okay, or even a $10 stop loss. As soon as it breaks it, it'll force you out of the trade because you're breaking your own rules. That's why I love it. You're not breaking your own rules. You have to have your rules and you have to stick to them. If you don't stick to them, it's GG, man. It's over. That was the point. There's still that little which leaves me to again believe that in London we're going to come up and we're going to go for this liquidity up here on DXY. That's the liquidity you're looking for. Interesting.
Instead of searching inside for what they gave him, a strong will, strong mind causes mayhem. We could change the world.
Okay. No ways is it sunny, NEV. It's like partly cloudy, kind of. What's the temperature right now? It's 13 degrees and cloudy. Okay. So yes, this risk is great. Then when we have your charts, okay, here in your charts, this whole range will be seen to in the day. It will. And we have DXY. That's the liquidity I was talking about right there. That's what we're looking for. That's what we're looking at. Okay, and close this. Open that. Done. Okay. I have a light right here. Let me turn my light off and you'll see. It's quite dark. But I do have light, and I can also change my light, which is quite cool. So if it's dark like this, oh no, that's not it. I can make it brighter and darker depending on the room itself. So it is what it is. I like having a bright, sunny space because if you're in darkness, it's hard. I know, because what I was doing before was I was trading. I was actually trading the silver bullet before the silver bullet was even mentioned with ICT, and and then yeah, it was amazing how he came out of that, and I was like, wow, this is similar to every other trade strategy I have. Forex Khan, how do I deal with spread? I'll show you how I deal with this with spread. Let me close this. And open this. How do I deal with spread? Let's look at this, for example. Do you see spread? Let me move my mouse. Forex Khan, do you see any spread? Let me zoom in even further. Tighten it up, and then be nice and this. How much is the spread? It goes between 0.0 to 0.1 spread. Mind blowing. Funny. That actually looks like a decent entry. I'm not gonna lie. That's not at my time. Again, we've just snapped out all that liquidity. And sorry, all the liquidity. Let me do this. There's liquidity here. All this liquidity that's been set up. This is a snipe out, and then now it's possibly going to come down. Thinking it'll probably come down to somewhere. Yeah. But again, it's not in my time, so I don't trade it. So yes, it's Blue Guardian that they have zero spreads, or not perfectly zero, but they use 8cap as their broker. Now 8cap usually has a 0 point, sorry, not 0 point, they have a $7 commission, so it's $3.50 aside. And Blue Guardian somehow have got a really good bargain where they have $6 aside. But of course, I mean, I'm still a little bit confused as to how demo accounts have commissions. But what they're doing now is you're treating it like a real account. So you need to treat it like a real account with commissions and everything like that. Needs to be exact. Are you sure about that, Forex Because I have an 8cap account. Let me get into it quick. On my 8cap account and in my previous trades, if I pull up my last one, I was risking 20 lots. Okay. And with those 20 lots, I had a commission of $140. And what that means is that if it's 10 lots, it's $70. If it's 1 lot, it's $7. So 8cap actually has a commission of $350, not 3. Yes, Forex. Can't if you the funded trader uses the same thing that Blue Guardian has, which is I think that they don't use it's not like with retail. If you open your own account through 8cap, it'll be a different price. You get charged more commission for a Razor account or a Raw account, unfortunately. I was just going through my trades here quick. Okay, here's another 20 lot that I had. 140 commission. My profit was 1,760. I only got 1,620 of that. Unfortunately. That's life. That's what happens. Yeah, it's low commission because it's demo account. They're hosting the servers. They still need to be paid. That's how I see it. Is that it's actually good practice to help you in the real world with commission. Okay, so with spread manipulation, I haven't seen much spread manipulation on 8cap actually. Only spread manipulation during the stupid times where you should not be trading, where there is spread. Yeah? So what I mean by that is if you're trading between New York time, 5 p.m. and 6 p.m., you're going to lose. The spread on every broker opens up wide during that time. Why? Because liquidity is entering, or the algorithm or liquidity is entering and exiting the markets at that time, and then there is no liquidity. When there's no liquidity, it costs more to buy something or to sell something because there's no one buying or selling. And if you, again, on the, it's like every pair is the same. Not pair, every broker is the same. What they'll do is during like big opens, so if you have the open of London, the open of New York, they increase the spread. So again, if you're trading between 5 and 6, you're going to get wiped. If you're trading at like 8:30-ish, you're going to get wiped because the spread. If you're trading London time at 2, between like literally as 1 o'clock switches to 2 o'clock, the spread widens because that's when the opening is. So FOMO no bueno. Are there any cons to Blue Guardian's no time limit evaluations? That's actually a good question. It depends what you see as a pro or a con. I see the pro as being it's no time limit, A. B, it's cheaper than the standard. The only con I would say is that they give you an 8% max drawdown. compared to 10%. But that's fine because there's no time limit, which means that you're able to risk less and spend more time being consistent and then make profit. You should not get anywhere near 8% max drawdown ever. Like max drawdown for the day, daily drawdown is 4%. If you're risking like I said in the beginning of the stream, if you're risking 1% of a trade, even on like normal challenge, not normal, but like the other prop firms and stuff, you're trying to get 10%, you have 10% drawdown, you have a 5% normal daily, but you're timed. You have a month or 30 days, 30 trading days, which is generally a month and a half. No, they do it a month. They don't do trading days, which is, I think, dodgy. You only have 20 trading days to make 10%. So you have to risk more. When you're not risking like that, because you have time, you can do whatever lot size you want. Even if it's a 0.001. If you want to risk $10, you can. And take your time. Obviously, if you have $100,000, you don't want to, like, the time it'll take you to make that money will take a long time. That's why for me, I have a 0.25% for this, because it's $100,000. I have limitless time. You can do whatever you want in however long you want to do it in. I'm just keeping this up because of the spread, so you can monitor it. This is the spread, the 0.2 over here on GBP, and then the 0.3 on AUD. I mean, it's not bad. The spread is, see here, you see what's happening? That little like ticking that's happening like that. When I see stuff like that happen, I know something's about to happen. And when its price stalls, it's stalling everywhere. Yeah, wide. Same. Just snapped it. So I don't trade. My trade normally 850 to 910. That's it. I'm in and I'm out. But I'm 30. I'm done. Normally. Again, you can see this on GBP. Like, look at this perfect. Anyways, yeah, it's really good. So, and then on top of that, they have their guardian protector thing, which means that even if you do lose your mind and decide to start risking more for some reason, it will force you to cut your trade, and you can't risk more. So therefore, you're not going to lose more than you want. Which is great. I mean, who doesn't want to protect their capital?
Try to play, but you're never gonna beat me. Look the other way, what I'm doing ain't easy. Bloody hand stain from the people who deceive me.
And I mean, from what I see about Blue Guardian, like, there's the only negatives, if you look at the negatives of it and not the positives of it, is that it's not you don't have the 10% drawdown and you don't have 5% daily drawdown. You have 8% and 4%. Other than that, it's the same as everything else, except 1, it's cheaper, 2, it's unlimited time, 3, they have been going originally since 2019. Okay, they're originally actually a forex signal provider and an educational institution. All right, then they rebranded in 2021, so they've been around for over 2 years now. Okay, and if a company is around for over 2 years, it means that they are actually doing something right. It means that the profits, they are making profits. You know, and then the company is successful, which means that if you're trading with them, you could probably get paid out. You could, you know, it's if you manage yourself right, manage your risk right, you're not going to be like chopped. Okay, you're not going to be chopped up. But yeah, the protector thing is definitely a plus. So you said it, and then it's like, okay, I can't. I know that emotion. I've been there. We've all traders have been there, where you're literally like, it's gonna happen right now. It's gonna happen. Like it goes up, and you're like, oh, it's gonna go in my direction, and then it goes in your direction a little bit, and you're like, great, I'm entering. You enter, it stops you out, and you're like, okay, cool, I'm gonna enter again above that, and as soon as it goes up again, you enter again. Those days are dangerous to trade because you can blow your account in the day. Okay, if that starts happening, then you blow your account. Done. Because you enter again and again and again and again, and then you forget the commissions, you forget your percent risk for the day, or you've done a wrong calculation just by a fraction, you blow it by 1 cent and you're off. So just don't. It's for me, I saw this and I was like, this is revolutionary. There's like no other prop firm that I know of. Like FTMO doesn't do it, MyFox Funds doesn't do it, TFT doesn't do it. You know, it's something that I think will, all other firms, if they're going to do it, need to actually do, because you want to protect your capital, you want to be profitable. That's all you want to do. Everyone wants the same thing. Everyone just wants to make some money, and I get it. But you need 3 things. You need a strategy that you've back tested and forward tested and everything, and you're confident with. A. B. Because you're confident, your mentality will be better. If you're getting emotional, it's because you don't trust your strategy. That's basically all it comes down to. You don't trust it because you're thinking of 50 million different things. Or ICT said this, and then he said this, and then he said this, and then someone else is using an EMA thing, and then someone else is using the VWAP or whatever it is. They're all different strategies. You need to use a strategy within its context, and you need to just hit it every single time. Then you get the confidence of, oh well, I'm gonna lose. Yes, that's fine. I'm gonna win. Yes, that's fine. Overall, in the end, you want more wins than losses. That's it. Or you can have less wins than losses, but have a higher risk to reward. End of story. That's all. So for me, I can, again, for my strategy, I can lose 8 out of 10 times. 8 out of 10 times. Which means I lose 8 times and I win twice. And I'm break even. But my strategy is a lot, is more, there's more win rate to that than that. It's between like 60 and 75%. But again, the discretion comes in with how you identify the day that you're in. Okay, so these things are very, they're key for everyone. Yeah, you need to do those things. So A, you need to have a strategy that you're using. Doesn't matter what it is. Okay, you can literally flip a coin. You can, I don't know, I have a battery here. Okay, so I'm going to take this battery and I'm going to feel on both sides. And if one side gets warm, if this side gets warm, I'm going to buy. Okay, great, I buy. 50% of the time you'll be right. Just depends on your risk. So could you explain the free TradingView subscription when using Blackbull? Oh, so that's fairly simple, that question. When you have a Blackbull account and you open one lot to trade, one lot, literally one lot. How much is a lot? Let me do this. If I were, for example, I'm not taking a trade now, I'm just saying, this is an example. Okay, if I were to do this, and I were to say that my risk here, okay, let me stop that and I'm going to define my risk as 0.001. Okay, and I'm going to put this, that's not enough. Put this over here and pull this up here. I'm risking now 0.02 lots. If I do this, it's literally, I'm trading cents because you have leverage on the account. Okay. So now I'm going to remove that and I'm going to put 0.01. I have 10 lots of risk. So I do this and I pull that. The wider you go, the less loss you risk. The tighter you go, the more lots you risk, of course. Okay. So for this trade, for example, if I were to take this, it would be a 1.4 pip stop. I would have risk 50 lots. All right. Which is $7. How much does a TradingView Pro cost? The 0.2%. I do this and I risk for this price action, you're risking 0.2% of your account. So it should mitigate all of that. Your target's mitigated, your stop is mitigated, the lots risked on the side, tighter, 20 lots, wider, 1 lot. You can literally risk that, take it off, and you get a free account. Anyways, that's just how that stuff kind of works. The risking, and you can do it. You can do it with multiple trades as well. So you have multiple different things. So you have, if you take a 0.1 lot risk, then you enter with lots. But I personally don't enter with lots. I enter with percent. Period. Nothing else. I go 0.25%. Wherever I have my stop and stuff like that, it auto adjusts the risk on percent, which is $250. So if you see that 243 there, that will stay around the same-ish the whole time. And if I go further, it'll stay the same price. But look at the lots. The lot sizes are different. Okay, so that's how I do it. Now, I a lot of people are like, oh, you need to do quick math and you need to do all this other kind of nonsense and all this stuff. Great, you can do that. I'd rather have a trade manager which costs $100. That's it for your whole life. Okay, or until you get a different computer. And then the manager helps you control your risk. And that's being a trader. You have to learn risk management. It will say, oh, risk management, but no one knows what risk management is. You can learn risk management by risking and getting the feeling. And that's all it is. You just feel. You feel, oh crap, this is happening, and you feel like, well, I have to win that back. No, if you have a strategy that is proven to be successful 50% of the time, 50-50, and you have a 1 to 1.5 risk to reward model over a long period of time, that's what we're doing here. It's period of time. It's not about, oh, I have to engage now, and then I have to trade London, and then I have to trade New York, and I have to trade all these sessions, and then I'm going to find all the little things that happen in between. No. Become an expert in one thing, one time frame, one day, one time of the day, and you just trade that every single day, period. That's all. If you want to trade a different zone, like if you want to trade London or New York or wherever it is, you can, but it needs to be aligned with the same risk parameters, and it needs to have the same kind of model of risk to reward as your previous strategy. That's all. Okay, but that's going to be me for today. It's going to be done. Unfortunately, we were within our range today, which means that there was no trades. So we wait for tomorrow. Okay, so have a lovely rest of your day or night or sleep or whatever you do with your life. Enjoy. Have a good one, and I'll see you tomorrow. Take care, everyone.